All right, and welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street for Main Street. If you've not done so already, please like, comment, subscribe to the channel, etc. Come subscribe to Jason's Patreon for only $5 a month. One of the best deals in the macro space, probably the best deal in the macro space. Come find me on carnivoretrades.com for premium content, swing trading, also offering coaching, and I have courses available now as well. Anyways, as for the markets, S&P traded lower this week. We got a little gap down on Monday and then pretty much just went sideways all week long. This type of action is typical of OPEX week as the institutions collect premium and just burn out all those calls inputs equally. And when the market moves sideways like this, it really just shreds that premium. And it's this type of action is very typical. It really just kind of hugged that 50 moving average all week long after that initial gap down you can see there. As far as the triple Qs are concerned, a little bit weaker here. So you can see the Dow and the triple Qs were down. We'll talk about the Dow in a second. But the triple Qs were weaker due to the rising yield. And that has been the theme here pretty much all year long. And it's something I talked about late last year as being a theme this year, and we're seeing a repeat of that right now. We take a look at the diamond here. So Dow Jones Diamond here, also lower on the week. Granted, the weekly chart is a little bit stronger here on the diamond, so not a terrible little, up move and kind of a pullback pattern there on the Dow. The Dow is holding up okay. Triple Qs, again, it's not a death sentence here for the bulls. A move up into the moving averages and then a pullback, and the spiders do look a little bit better here. They did close at the lows for the week, but ultimately kind of a move up and a pullback pattern. That is what I'm seeing right now. And interestingly enough here, one of the reasons why I say that, it's not a death sentence for the bulls here. Take a look at the Russell 2000. So Russell 2000 actually finished green for the week. Very, slightly green, but green nonetheless. And remember, the Russell 2000 represents risk, represents small cap companies. So a green close here for the week isn't really that bearish, all things considered. And another thing you have to consider is a lot of the selling this week is potentially related to OPEX. So, bear that in mind. The institutions and the dealers have the strike price that they need the market to close at in order to burn out the premium. And a lot of the times they have to put those hedges on for OPEX. And then, once that week is over with, the hedges can come off and the market goes where it actually needs to go. But in the short term, you get this type of action where it basically just gets pinned to one price, or, even just to a moving average at this point here, right at that 50 moving average, as is in the case of the spiders. But, overall, we saw a move up off the lows. Markets got overbought. Investors got too bullish, and now we're getting a pullback. We did put in a little bit of a bearish pattern here. Let's zoom in on that. So you can make a case that this is kind of a down move here, and then just kind of sideways chop. So you could be setting up to move down to that 432 handle. There's also a lot of support at 430, and if you get through that, 425 is a wall right now. But that would be your area there on the downside if the markets did continue. If the hedges come off, we could see a gap up Monday, though, and a resumption of this kind of up move. So those are kind of the two sides to the coin that I'm looking at right now. But overall, I'm basically neutral to positive on the market here in the near term. Anyways, let's move on here. Let's talk about the 10-year US Treasury yield. So now up to 2.828. Huge move on yield. So a pullback earlier in the week and then just a blast off move on Friday. I do believe rates are close to putting in some type of a top, though. I'm going to be doing some cycle work on this over the weekend for the members. Again, this is going to be premium content just done for my members here. But I do think we're getting into pretty close to blow off territory here for yields. And I was one of the guys that was saying yields are going to go a lot higher really all last year. And it has happened. We are into that 200 moving average. Again, when you have a lot of momentum, sometimes you can pierce these levels. This is a monthly chart, so sometimes it takes time to play out. But you're getting very close to that 3% level. You have this big red bar here on the 10-year. As for the 30-year, guys, I said banged the table that we're going to 2.8 for a long time. And I also said that there was a chance we could get up to 3. And we got very close to there today, which is Friday, 2.929 on the 30-year. 30-year mortgage rate actually clipped 5% today. So big moves here in the credit market. 30-year, there's still a chance it can get up to 3. Originally, I think I had a max move of about 3.06 somewhere in that range. I'd have to do the numbers again, but I could see it piercing that 3% area. Markets love to pierce those whole round numbers just to get it out of the way. So sometimes you'll see that happen. I mean, and who knows? You do have this 200 moving average up here. If things really have a blow off move, there's nothing to say it can't go up there. But it is getting very extended, very long in the tooth, and I'm planning on doing some work on that over the weekend. But in any case, massive move here for rates. Just incredible stuff overall. Let's look at high yield. So we talk about this pretty much every week here. So we had a little bit of a fake out on Monday. So they gapped us lower, gapped us below this pivot. End up being a fake out. That is, again, typical OPEX games. They get everybody on board, try to get everybody to jump short, and then they take everyone's shares and push it back up. It did close red on Friday, but it closed above this green bar, and believe it or not, it actually closed flat for the week. So you can see that gray candle there, and more importantly, it held this green bar low. So we'll give high yield debt the slight upside bias for now. I think it's at least safe as long as it holds this pivot low on a weekly basis. So high yield debt obviously in terrible shape, and it probably will go lower. It's just the nature of it, but in the meantime, it can hold up as long as it holds that pivot. Anyways, we talked about some of those potash stocks last week. So here's Intrepid again. Again, nothing's really changed. It did chug higher a little bit this week. This is a monthly chart here. 1, 2, 3 months up, huge volume there. And again, I still expect 125 to be good resistance. Again, it could still pierce. There's nothing to say maybe it can't get up to 150 even. Let's see. Yeah, 146 is the high of this month here. And this is a big red bar. There's a lot of supply up there. So somewhere in that range, but those targets haven't changed. Same thing with Mosaic. I think I gave $80 out. Haven't gotten there. We, continued higher this week as well on Mosaic. One little pullback day and pretty much made 52-week highs again. So $80 there, 125. Possibly 150, possibly higher on these. If when you get momentum going, a lot of the time these levels can pierce. So don't be surprised if that happens. But these continuing to go parabolic at the moment. Anyways, let's talk about crude here. So energy. So we got this kind of triangular pattern. Let's get rid of these lines. These are kind of less relevant now. We've traded through them so many times. So basically, bottom line is you've got lower highs here, and then you've got kind of equal lows. You made a slight lower low here, but it held. So crude did bounce. Now the levels I'm going to be watching here are 109. So 108.75 is this high bar pivot here. And then really 113 on the weekly. This is the big level here. So this red bar high on the weekly, a close above that, a weekly close above that would take you, up into the upper 120s again. And nothing to say you couldn't challenge those highs. But I think crude right now, and I've stated this over the last couple of weeks, I think crude is in consolidation mode right now. If it does head lower, it's got a ton of support around 85, a ton of support around 90. So that would be a good area for probably some type of a long swing trade long, possibly even a little bit longer term long. But, obviously you have to see what it looks like when it gets there, but that is major support. But ultimately, I think crude is just kind of in a backing and filling mode at the moment. It's just kind of permanently locked in this sort of higher range for the time being, but it is holding up and we'll respect it for now. Other areas of energy, nat gas, what can you say? Parabolic move here. It's in parabolic territory. If you own it, trail your stop. I know some guys you guys own UNG or Boyle. Just trail your stop, protect your position, make sure you're trimming it. Because this is extended and it's in parabolic territory and it needs to pull back. And when this pulls back, it's going to pull back probably to $6, possibly sub $6, and it'll do it very quickly. This chart of crude here is a good example. So you get this leverage that gets out of control. The trade gets overcrowded, everybody gets leveraged. Then you have one little down day and everybody gets hit, margin called, and nat gas is it's not even as thin as, or it's not even as thick as the crude market. So this can come down a lot faster even than crude can. So just be aware of that. It's parabolic, it's extended, needs to pull back, but obviously if you own it, good job. Just make sure you protect that position. All right, gold here. So gold did inch up over the last week or so. Little pause day on Friday. Maybe they pinned it right here for OPEX, 1975, closed just above that, 1977. Ultimately, the big level here on the daily chart is 1994.8. Basically, you could call it 2000, but that's your high. Daily close above that. would be a positive, but you still have this big red bar here. So I think it's going to need to do more consolidation if it is to attack those highs. On the downside, again, 1875, somewhere in this range would be kind of your support area. But overall, gold is a little bit range bound right now. GDX did make a new 52-week high today, but I see a lot of resistance around 42 bucks. So right in that kind of, right in this area, this is where you broke down. You kind of back tested it right there, got as high as 41.81, and then you reversed. So that tells me $42 is going to be a good resistance area. But hey, GDX it's doing what you want it to do, and it's leading the metal, right? So gold is, or GDX is making higher highs and higher lows. And gold, despite having this kind of blow off move here and not making higher highs anymore, you're seeing that metal start to catch up. That is a good leading indicator. So it's possible good things are on the horizon here for precious metals. Speaking of, let's take a look at silver. So we've been following this kind of channel here. Broke through that this week, so nice move for silver. I didn't think it was going to push through it this soon. Then had a flat close on Friday, but you closed above this red bar on a daily basis, so that is a good sign. There is a lot of resistance up here around 2650. You've got this red bar high, but on a weekly, this is a nice little pullback pattern, nice little kind of flag pattern. Again, a lot of resistance up here, but if it, pushes up and does some more consolidation, nothing to say it can't continue higher. Let's look at the SILJ. Again, the same reasons why I like GDX, same reasons why I like this. So you got a lot of resistance at this red bar around 16 and, a little bit higher than that. But if it does some backing and filling, you can get through that. And it's trying to flag up. So you got this little mini pendant here, and you broke through that. Had a little pause day today. But if this does some more backing and filling, there's nothing to say it can't get up to this gap and then eventually advance. So it's doing all the things that you really want it to do overall. And I don't really see any problems at the moment. It's above all 4 major moving averages. That is a good sign. Platinum and palladium, both are kind of a no touch for me right now. I do think they need to go lower before they can put in a bigger sort of bottom. Copper here, what can you say? It's been sideways for weeks, but you went up right here and now you're going sideways. So it's trying to take out supply to attack this red bar, but I think it's being, personally, I think it's being manipulated every time it makes another high. That's just my opinion based on the price action, but it's trying to hold up for now, and it's doing okay. Uranium, so URA here, continue to push higher here. CCJ also made new highs this week. Again, no real reason to update these. It's kind of doing the same thing as last week. Denison never really confirmed above this little wedge here, but it's holding there. It's doing a nice job of holding. URNM advanced as well. Obviously, the Sprott Physical, a nice move, little pullback there. Don't really see any problems in the uranium market. Again, like I said last week, they're doing everything you want them to do on the larger time frames. All right, let's flip over and talk about the coins here. So let's cover Bitcoin. So we broke through this trend line here. You kind of flagged down, and then you had another little continuation bar. And now you're holding this lower trend line for now. So we have to see what kind of a pattern we get. If this trend line breaks and you sustain below that, it could be very problematic for Bitcoin pretty quickly. But you do have a lot of chop in this area here, around 38,000. So leads me to believe even if we do break through that, there's a chance it could, they could rip it back up. I do think this trend line is pretty solid, and granted, you are into this inside bar here, and it is potentially a continuation pattern just like this one was, but we'll see what we get over the weekend. A lot of this could be OPEX related. Same thing with Ether. Look how they just held it right above the 50 moving average on the daily time frame pretty much. So here's your Monday, Tuesday, Wednesday, Thursday. Again, typical OPEX action. So we'll see what it does. We'll see if it can hold that 50 moving average, but overall you want to see the coins shape up a little bit more. That will be a good sign for the equity markets in general. Anyways, one last thing I want to cover here is today we got the AII sentiment survey data. So for April 13th, we had just 15.8% bullish. And that is, if I'm reading this correctly on Twitter, I think this is verified by a couple of accounts, but that's the lowest reading since September of 1992. So not even the GFC did this reading get that low. I do like sentiment survey indicators. I do like the bull bear ratio by IBD. I do like this one as well. This isn't a guarantee by any means or anything, but it does give you a snapshot and kind of an idea of what investors are looking at. And if you go over financial media, it's pretty bearish, overall. And I'm inclined to think that this is more just kind of a pullback pattern, really. To me, that doesn't mean that it's going to last forever. I do think we get a move up. That doesn't mean that will last forever. But I do think that there is, obviously, this was a major short squeeze. I still think there's potential for one more good short squeeze before the next big sell comes overall. At least that's just the way that I have read things so far. Anyways, guys, I'm going to wrap it up here. Thanks for watching. Again, like the video, comment, subscribe. Come find Jason on Patreon. Come find me at carnivoretrades.com. And I will talk to you all next week.